Well, we have a new YouTube star, at least in my opinion, today. Larry Goldberg hit it out of the park last week. The #1 video ever on this channel. Now, we've only been around for 13 months, but still, we've done 700 videos or something. So, Larry, thank you so much for being my #1 star now.
Oh, it was a lot of fun doing that video. It really challenged me to dig in and try and discover new stuff. And I will say that it was really fantastic to see, the what do they call the man, the Titan, what's Sandy's name? Sandy Monroe.
Oh, Sandy Monroe, yeah.
Tear down Titan. It was
Yes.
really interesting to see the tear down Titan today, talking to the execs at Tesla, and they were telling him all the secrets that we discussed. And we found a lot right, and maybe a few corrections to make, which we will in due course. But yeah, it was a lot of fun doing that research, and very, revealed a lot of layers to what Tesla are doing, and those layers became manifest in Sandy Monroe's video today. So I recommend everybody watch that video. It gives you a sense of just how deep the bench is and how deep the knowledge is at Tesla, and just how much they're doing and what is to come.
Yes, what is to come. Yeah. And then Brian White is going to try to beat your record. His video from earlier today is now sitting almost at 10,000 views and just going crazy also. And we were talking about the numbers. And he was a bit surprised to hear about your estimate of 1.25 million vehicles out of Shanghai. He didn't totally dismiss it. On the other hand, he says he thinks there's 1 million possible in Fremont, which I thought was a very high number. And then he says 1 million Model Ys possible in Austin, 650,000 possible in Berlin. And then you add in 75,000 Cybertrucks, the total capacity per Brian would be 3.825 million next year. Although that would be you can't get there in a year because
it would be the production capacity at the end
of the year. Right? Mm-hmm. And
I think he's a little high on Fremont, because I've toured Fremont and I've listened to the engineers at Fremont. I think Elon has mentioned a capacity of 750,000. So,
but now that was before the Model 3 changeover, which Brian believes will allow them more throughput.
Yeah, I don't want to comment at this point. I better not comment. Yeah.
Okay. So anyway, but when it did, the whole thing blew my mind, and it's made me very, very happy, because I don't think anybody's thinking this way in terms of the total potential production already being in place for anywhere close to 4 million before Cybertruck,
Well, let me give you this data point.
Yeah.
Very important data point. I called for 2.4 million.
Right.
Is my number. Today, hours ago, within the last hour, Gary Black, who I think we can respect for a very cautious, conservative, analyst.
Yes.
Investor, by the way, he's a fairly significant investor, or he has made it for his fund, has made a significant investment. He called for a volume. He projects a volume of 2.4 million for the coming year.
Exactly your number. Go, what the heck, huh? So,
I think there are, we can argue one factory versus another factory, and that's a legitimate conversation to have. But one thing is very clear, when you see Shanghai delivering 90+ thousand cars last month, and they haven't hit their stride yet, with the Model 3. And it's a good mix, because it's got, a significant mix of Model 3 together with Model Y. The challenge for 2024 is only one thing. It's not production, I don't believe. I think it's pricing. Because Tesla have got, the Model 3 and the Model Y.
Yep.
And both of these are, really speaking, premium cars.
Mm-hmm.
Well priced, but still at the upper end of the volume car continuum. And so for them to achieve those numbers, they will have to compress their prices a little bit in some markets, and quite a lot in some other markets, and very little in other markets, but they will have to compress their prices in order to achieve those volumes. Now it pays them to do that, but it will not be, a 20%, or maybe it won't even be an 18% year next year, but I believe it'll be a 2.4 million year.
All right. So, but if you do 2.4 million and you have a little compression, your profits will still be significantly higher at the end of the day.
And next year is the year that the energy revenues will deliver. So I'm very comfortable about next year at this point.
Now, of course, the alternative, not the alternative, one alternative would be advertising in order to get the word out to people about the low price. That's the biggest concern I have.
I agree, but it's not a replacement for pricing. Right. It is a requirement. It is it is the absolute requirement in order to get those volumes up, with or without price. The pricing could be pitched perfect. Without advertising, they're not going to get those numbers. So I agree with you.
Right. So as a marketing guy, I'm thinking we've already lowered the price a lot and the market doesn't know it yet.
Not in China.
Not in China?
I think we're still, price premium in China. I think in the United States, we're pitched perfect. I think in Europe, there's some adjustment to do. But look, I'm not a pricing expert. That's not my field, and other people know better than I. These are just instincts of mine. But, I think that Tesla have got work to do to get the word out that Teslas are affordable. They're no longer the the high premium car. They're affordable. People just don't know it yet.
So you could have, for instance, Larry, you could have a 200,000 increase in China, which would be only a 25% increase. You could have 150,000 increase in Europe, which would be even a smaller increase than that. The real opportunity for increases in the United States. You have the factory in Austin that has tremendous capacity available on Model Ys in particular, and maybe some additional Model 3s out of Fremont. So that's why I'm talking about advertising in the US, where I think you've got the discounts all ready to go. I think it's time. I think it's time.
And you need to advertise in China. Don't underestimate the power of advertising in China. And by the way, Europe can do with a lot of advertising, price setting. Look, there's a lot of work to do. There's a lot of work to do in the area that Tesla has been known to not do the work.
Right, exactly. So now it's really just a matter. So what I guess my takeaway from that conversation with Brian and with you the other day is I was thinking capacity was going to be the issue. But if Tesla believes that they can get there in terms of the sales, they can kick up the capacity easily they really have enough capacity now to hit their numbers in 2025 without the Gen 3 vehicle.
No, they cannot hit the numbers in 2025 without the Gen 3 vehicle. I'm sorry. The Gen 3 vehicle has to start really hitting its stride by the end of 2025 because
24, you mean 24?
No, I think
starting hitting its stride by the end of 2025.
Yes, because 2024 they have to really focus on getting the Gen 3 engineered and into production, and that first quarter of 25, certainly by the second quarter of 25, they need to be shipping cars.
Okay, and then that brings up Gary Black. Gary, we already quoted Gary Black as having agreed with you on the number for next year. Gary Black also says he thinks that they'll introduce the Gen 3 vehicle in in Austin, I mean, in the United States, in Shanghai, and in Europe, all three simultaneously in Q4 this year. What did you think about that idea?
I think he's a little premature, and I think the Gen 3 car will come to Europe from Shanghai. I don't believe it'll come from Berlin. I think Brian is absolutely on target with saying it's going to be very difficult for Berlin to, to fire up a production line by the end of this year. Although it's possible, they've got the space to do it. I disagree somewhat with Brian about not putting the Gen 3 into that space. I think they could. I just think that the chances of Shanghai actually completing the build on the factory and starting the production, I think are pretty low. I think the one place where Gen 3 could go into production before the end of the year with a good shot at getting production into next year first quarter is in Austin. And I could be wrong. I mean, they have to build a whole factory. They can build a factory in 9 months in Shanghai. They've done it before.
Right.
They can get into production in 13 months. They've done that before. The Gen 3 is not going to go into production as easily as Model 3 went into production, because Model 3, they just had to assemble, parts that were shipped to them. So I think, we have to be a little bit measured about this. People are getting a little ahead of themselves. But I was very, very impressed with today's video with Sandy Monroe and the 5 managers that he met with.
Right.
Clearly, Tesla's done a lot of homework. Now, will that get them Gen 3 by 2025? It's going to be a mighty struggle.
So,
but I'm hoping they are really focusing on that now.
So there was yet another video today. So many videos. Like I said, I didn't have time to watch all of them, but Herbert had Joe Tegmeyer on, and Joe, he's saying, yeah, they're well along. He says, I've been holding back on this. He's been seeing it since last year, seeing the permits go in for the Gen 3 vehicle since last year. And seeing it all along as it's been developing, and he thinks maybe it's quite well along in terms of Austin at this point.
Well, I have enormous respect for Joe, and so I will take that on board for sure. I didn't see that yet. I will definitely watch that. He not only watches the factory on a day-to-day basis, but he has deep engineering skill, knowledge. I should say not skill, but knowledge, and he doesn't ever get over his skis. So I think that's really an important piece of data. But we have to be a little cautious at this stage. I think we're all a little, in a celebratory mood because all the surprises that came. Look, we waited for the Cybertruck very patiently. We thought it would come a little bit early in the year. It came at the very last minute, but wow, when it came, what we saw. Anyway.
Yeah.
What's the news? Is it good news Friday? I mean, good news Monday? I mean, where are we?
Man, we got so much good news, but there's one more thing here with regard to the competition. Ford is cutting their production on the Lightning in 2024 in half. They're only expecting to make 83,000 vehicles next year. We could sell more Cybertrucks than that potentially.
I don't believe that the Cybertruck and the Ford F-150 are that competitive at this point. I think the Cybertruck's going into the very, high end of the market. By the way, where is my Cybertruck?
I know, I saw your comment.
I am really teed off. Elon, give me my Cybertruck. I'm like, way higher in the pecking order than most of these guys are getting this, because I made a very early order. But, I'm sitting in the back end of the United States. People don't take any note of us sitting here in the South in North Carolina. It's like, don't exist. Come on, Elon, give me my Cybertruck.
That's right. Well, switching to the financial side, We had a lot of talk, of course, about the other day. You and I spent a lot of time talking about qualitative. Well, right now, what's been qualitative and continues to be qualitative tightening, and the need for the Fed to move at least to neutral on this, rather than continuing to sell off all these bonds.
Yeah.
And then earlier today, you sent me an article that sounds like somebody else's. They were listening to the show, Larry.
Yeah. Well, I mean, one has to give Nick, all the credit in the world. He's an amazing analyst. And he follows Tesla, which is interesting because I've been following him for some time. But Nick Colas, he's been around for a long time. He's been a trader. He's worked for some very fine hedge funds, very successful hedge funds, and he does a lot of very good analysis. And he's calling for it. He's calling for the end of this tightening, this unwinding of this enormous balance sheet that the Fed has, because it's really impacting, the money supply. It's impacting, the bond prices, and it's unnecessary. It's the last thing they should be doing when we are drifting slowly into, what amounts to a recession. Or we're in a recession. It depends on which way you look at it. So Nick is doing an analysis, and he's saying, it's really time to close that window and stop selling those bonds that are sitting on that balance sheet. Now, it's true, the Federal Reserve are very uncomfortable with this gigantic, $6.5 trillion balance sheet. And I've spoken about it on this program. So I'm not surprised to hear Nick say it, and it's timely. And yeah, they have to stop. And you called it last week. You said they have to stop.
We've been talking about the M1 and M2. I don't know, Larry, ever since you've been a part of a regular on the show, we've been talking about M1 and M2 going back 3 or 4 months, that this is not good to continue to tighten up the amount of money in circulation. So I stated, I think earlier today, or maybe it was yesterday, that what happens tomorrow and Wednesday with the CPI, the PPI, and the Fed is going to set the tone for the rest of this year. I mean, if we have a miss and this comes in higher than expectations, I think the market could get pounded. If the Fed is hawkish, the market could get pounded. I mean, it's at all-time highs for the most part. So it's ready, it's ripe for something to just knock it down a whole bunch. On the other hand, if it comes in lower than expected, if inflation is better than expected, if the Fed says something a little bit dovish, like we're considering the timing of cuts next year or anything close to that, then the market will be, the Santa Claus rally will be on and we'll be off to the race. That's my theory. What's yours?
I don't disagree with you. I mean, it's a real tragedy that we depend upon this, once a month, snapshot, which is really quite meaningless. I mean, it truly is meaningless. We need to look at continuum. We need to stop looking at what was, X months ago, or what was all the activity of X months ago that makes up today's. We need to look at the continuum of the overall movement in the market. We need to look at the true money supply. We need to look at the true speed of money, the velocity. So all of these things are more important than this, quarterly, monthly snapshot. And so it's really a great pity that we cling to these antediluvian, methods that go back to the 70s, and even earlier, actually. We need to be, we need to keep a hand on the pulse. When the doctors take your pulse, they don't look at your chart from yesterday or from last month or last quarter. They actually put their finger on the artery, and they actually count, 1, 2, 3 to the minute. That's what we need to be doing, and we have the machinery to do it. We have the methods, we have the equipment, we have the means to do it. And so you ask me every month or every announcement of every particular thing we track, and you ask me, what do you think it's going to be? And I'm bored by the question, because quite frankly, it's meaningless. It's let's look back, 6 months, 1 year. We have the means to track in real time what's going on in the economy. We truly do. We're instrumented in today's world to track what's going on in real
Absolutely.
time. And the market should be doing that. Now, the market's becoming wise a little. So some of these announcements are less, critical than they used to be, but they're still overblown. And it takes the market 2 or 3 days to readjust to the reality. So
Even in the same day, Larry, they get the headline number and they go crazy on and then 3 hours later they're like, oh, look at this and look at this. Oh, it wasn't. So that'll probably happen as well.
Yeah. Anyway, having said that, I do expect it to be a good number tomorrow. And I expect the market to be ho-hum. That's what.
Okay. Well, okay. So then my other thing I've been talking about for 3 months now, I'm taking credit for these things, Larry, because I'm bringing them up. I'm bringing them up way ahead of the pundits. They need to hire me if they really want to know what's going to. Anyway, I don't want them to hire me. I'm doing just fine, thank you. This is more fun, and I'm independent. But I started talking about the rotation. And so the rotation seems to be continuing now for about 2 weeks. We had a couple of days when it didn't. You're always going to see that up and down part, but we've had the rotation now for about 2 weeks. They've definitely today, the Dow did very well, extremely well today, where the NASDAQ barely got into the green and the Magnificent Seven were down again. They're down again in after hours as well, the Magnificent Seven. So I think I looked it up, Larry. I asked ChatGPT. I didn't ask Grok. I asked ChatGPT, how long does it have to be going on before we're in a rotation? And they said it depends.
It gave you the right answer. Gave you the right answer. I mean, you wouldn't have got a better answer from a Nobel laureate.
So anyway, I'm calling a rotation. We'll see. I probably need another couple of weeks before we can say it's really happening, but only a couple. I've only seen a couple of headlines really speaking to it. Nobody seems to have really said, oh, it looks like we're in rotation. Now, not that that's a bad thing. The people who have had their money in the Magnificent Seven have made tons of money this year. And so taking some of the froth off of that and putting it into some more, some dividend stocks makes a lot of sense. But anyway, that's just an update on the rotation for today.
Yeah, it's a good observation. Look,
go ahead.
I think that, we're entering a fairly good period of time when we're obviously, the Fed is catching up, the fiscal authorities are catching up, and the fiscal situation is so bound up right now, so mired, that it's more than possible the government won't get to spend too much more money. Although I fully support the foreign aid bills for Israel and Ukraine. But I think that all other expenditures, or most other expenditures, are going to be off the table for a while, which is a good thing. I think the Federal Reserve will realize the errors of its ways. I think Janet Yellen will continue taking her victory measures. But I remain very concerned about the real economy. I think they've been too tight for too long, and I think we're going to pay the price next year. And, I think that the rotation is going to reverse, by mid to late next quarter.
Oh, if that happens, then we will have had an actual rotation. And yes, of course, they then reverse again. We also had, I forgot, Larry, as you were talking, I remembered there was a headline today that I forgot to mention to you, that the quit ratio is dropped dramatically. It's down to something like in the 2 to 3% range now. That's another huge benefit to productivity. This quitting and moving on thing is hard on productivity. And so the fact that that's stabilizing would be one more indication that we could be seeing much better numbers on the productivity front coming up.
Yeah, and maybe that's going to impact the total employment figures, because I continue to obsess with the level of employment in the country. I think it's at a very low level. I think it needs to increase dramatically.
But you mean bringing more people who are not interested in working or have not been interested in working?
They're counted as not interested in working. I think that count is wrong.
I see.
It's part of this antediluvian. I think it's part of this antique structure of how we measure the economy. I mean, my background is in decision management. In decision management, the only thing that matters is the accuracy and the integrity of your data. And I believe that the unemployment figures in this country have no accuracy and no integrity. And so what we're measuring is phantom numbers. And those phantom numbers really, drive some really bad behavior by our Federal Reserve Bank.
Gotcha. All right. Well, let's take a look now at where we stand right now. We have the bonds in the pre-market. The 10-year is unchanged, but it's sitting at 4.239. So still under that 4.
I needed to hold itself up there for a little bit longer, because I'm about to try and make an investment in some bonds, but my timing is a little.
Oh, no. Then Larry, I'm not giving you investment advice. I would be buying the 2-month or the 2-year.
I need 2 years. Yeah.
Yes, the 2-year is still sitting at 4.714. It did come down a little bit in the pre-market, so it might be timing right now.
But I think the big movement is going to be in the 10-year. I think that's where the big movement is going to take. I could be wrong. What do I know? I'm just a guy, but I think the big change is going to be in the 10-year. It's not so much how high it is; it's how big the change is going to be.
Right.
I wish I'd listened to Nick 2 months, 3 months. Well, it wasn't Nick. It was, who was it? I was on your show and I was saying how they were saying buy bonds.
That was me, Larry.
It was you, but I was actually quoting a very, I forget who my 76, you don't remember these things. 77 is worse. When you remember, you're 77 and not 76.
There you go. So it is the 2-month that is going up right now in the pre-market today, which is the one I'm like, it's just blowing my mind. It is at 5.43. It is over 100 basis points higher than the 10-year. That's the one I think if I was looking to buy bonds, I'd be buying the 2-month or the 3-month.
Yeah, the 2-month is not going to move very much at all if it gets improved. You see that. Just look at the relative value. If you buy a 2-month bond, and 2-month drops dramatically,
right,
the value of that bond doesn't change very much, because the differential is only for 2 months. So that's why it's not that valuable. It's a good indicator because it's a contraindicator in a way, because it's a short-term bond.
Right.
You buy a 10-year bond at 4.2 and it falls to 2.8. Guess what happens? That bond goes up by a very significant amount of money.
Which proves to you what I don't know about bonds, because I've just never traded them.
So it's, when you have an inversion like we have now, I mean, what you have to do is look at the value of that 10-year bond and consider where that's going and what that inversion is telling you. What that inversion is telling us is that we're entering a recession. And I know you don't believe that, but that's what it's telling us. And the other, either we're entering a recession or are in a recession. And the other thing it's telling you is that when things return back to normal, that bond's going to be worth a lot more than you're having to pay for it now.
All right. Well, oil prices continue to be low, $71.41. It's up a tiny bit in the pre-market. Natural gas got slammed today, like down 10% during the regular hours. And now it's sitting at 2.432. And then natural gas, as we've talked about, affects oil some people are saying they think oil could be headed for much lower territory. I still don't buy that. I think.
I buy it. I buy it.
Oh, you think
I
so?
can see a 6 handle.
Okay. All right. Oh, well, you know, I can see it in the 60s. Yes. Oh, definitely 67, 66, maybe, but I don't see it going below that. I think that's the range.
Yeah, fair enough.
All right. Okay. Gold slipped all the way under 2000.
As did crypto.
As crypto got slammed, but it turns out they think it was because of Liz Warren. Liz Warren's got this new bill up that would regulate crypto.
Liz Warren's chances of passing a crypto bill is like, I mean, zero. Come on.
Well, they only took 5% off, Larry. It wasn't like they took 20% off.
I mean, if somebody sold for that reason, I'm sorry, guys, no. I mean, I don't know what moves crypto. I don't understand crypto. I'm struggling. Well, I felt very good about crypto back in the 38,000 when Kathy Wood said crypto was actually they had actually some analysis that showed that crypto was staged very well, but I don't buy that, Elizabeth Warren,
Yeah, well, there you go. That was just their analysis today, was that they thought the timing looked like that's what knocked it down over the weekend.
Sounds like Wall Street analysts. Yeah.
All right, and then we have the dollar staying pretty normal, not a lot of movement in the dollar. And then we have the Dow up again, but only 9 points in the pre-market. The NASDAQ is also up just about the same percentage, 0.04%, 0.04, I'm sorry, 0.04%. And the S&P is the one that's down. That's a little switch. But all three of them are kind of going nowhere at this point.
What happened to copper today?
Oh, copper was actually today, I don't remember right now. It is barely up just a teeny tiny bit, 0.08%, but it's trading, Larry, in a range that's pretty much static from 5 years ago. So kind of like all commodities, it's sitting in that kind of range where it was many years ago.
Interesting.
Yep. And then we've got, finally, of course, Tesla. We always want to know what Tesla's doing in the after hours. Tesla is at zero neutral, no change at all right now in the after hours, but the other Mag 7s are down. Again, small amounts, not a lot of movement today. I think people are waiting for 5:30 to Pacific time tomorrow morning to see what happens with the.
I saw some of the first dribblings of end of quarter estimates, earnings estimates today. Saw some fairly good, detailed analysis that's talking about Tesla's EPS down quite significantly on price reductions.
I see.
Across their volumes. I'm not buying that yet for a couple of reasons. The major one of which is that China prices, which account for, 40% of all revenue, are not down at all.
Right. So
I would have to look very carefully at those price reductions they're calling at for the US and Europe. And it's hard for me to believe that they're going to compress earnings quite as much as these estimates called for. The other thing is they're looking at energy margins to stay static, and they're looking at increases in SG&A, and I'm not really buying that yet because I don't really think that the R&D has gone up that much. So, I'm still on the fence on a lot of these things, but early warnings are that earnings are going to be down at the end of the fourth quarter, which means that we will see a dip, and maybe quite a significant dip in the share price, at least at the announcement, not so much of the vols of deliveries and deliveries and production, but at the earnings announcement.
Right.
So just an early warning.
All right. Well, I don't buy it at all, of course. I am completely on the opposite side, believing.
Yeah, I'm surprised, Randy. I'm shocked.
I just wanted to, make sure that you knew that, Larry. I wasn't 100% sure.
Fair enough. But I thought I would put that on the table for what it's worth.
Okay, good. Well, Larry, thank you as always for co-hosting on Monday night and Friday night. And so we'll see you next Friday night. I think we might see you in between, because you and I talked about maybe a little show that might come out Wednesday that would take another look at some of these deep issues like we did last Wednesday.
I may be bringing a special guest.
And a special guest to boot. Okay. All right. I'll start promoting the heck out of that, Larry. Thanks again for all you do. And thanks all of you for supporting the show in so many different ways that you do. And it's been great talking to you.
Thank you, Randy.